Hi guys, so I got a message from somebody who said to me, Ken, is it normal to get to the point where you want to invest, but then to get fearful and then not to invest your money at all? And I thought that was really a fascinating question because it really just reminded me of the dread and fear that I had back in 2009 when I started off my personal journey towards investing my own money. And I remember making that first investment. I'd bought into a particular stock that had gone down significantly in value, and I did it partly because my friends were doing it. I just wanted to get involved. This is just after the 2008 crisis, and prices were significantly low, and it just reminds me of what we are currently facing at this very moment in time, where we have seen historic falls in the stock market. And I can almost imagine my old self feeling really petrified, except this time around I have a very different view of how the stock market operates and what investing is all about. So today I'm going to share with you a few tips on how to overcome your fear of the stock market and to then start investing for the future. My name's Ken of the Humble Penny and Financial Joy Academy. What we do on this channel is give you the tips, the insights and practical hacks to help you work towards a dream life of financial independence and money joy. We've been creating a ton of content around investing, and we love making those bits of content because we're really passionate about this very subject of investing. Investing holds a particularly important key in helping you achieve your future long-term goals. And I hope by sharing these tips today, you'll be able to feel a lot more comfort when it comes to investing your money, and hopefully be able to take that step if you're somebody who it's your first time maybe starting investing, or if it's something that you've maybe done in the past and maybe been scared from having a go at doing again. Okay, let's dive straight in now and look at how I would consider almost going beyond the fear of investing and getting you started with investing your money today. So the very first thing to do is to start to understand exactly how the stock market works, okay? So there's nothing worse than actually putting your money towards something without having an understanding, almost a complete understanding for how that thing works, okay? Now the stock market can seem very complicated, but when simplified and kind of viewed from the perspective of a marketplace where people come together to invest, you always have buyers and you always have sellers of various types of assets, mainly equities and bonds. There are other things that you can also invest in, but keeping it really simple, understanding the fundamentals of different asset classes and the roles that those various asset classes play in a simple portfolio is a very good way to kind of start to understand what the stock market's about and how it can go about working for you. We've made a pretty detailed video in the past, which has been really, really popular actually, called How to Start Investing in the Stock Market for Beginners, which I'll put a link to below and above for you to check out. I spent a great deal of time explaining step by step what the stock market's about, what the different assets are that you can get involved in the stock market, what type of roles they play, and what sort of account you can take to explore in order to get started with investing. What I hope you learn from understanding what the stock market's about is that the stock market historically has been about ups and downs, okay? There will always be ups and downs with the stock market, but if you look over a long enough period of time, the stock market has historically gone upwards, okay? So even with the stock market at historic lows at the moment, I can almost guarantee that in the very near future, you will see the stock market rebounding and heading back upwards as various economies pick up around the globe. The second way to overcome the fear of investing is to consider investing only for the long term, okay? Now, I'm gonna be very upfront with you. If you've got money right now that you'd love to invest and put to work because everybody else is investing, and you think you're gonna need that money in the next 1 month 3 months, 6 months, do not invest that money through the stock market. Okay? Going to be very upfront with you. You should really only be investing your money if you are thinking long term, especially in a climate like this where we are at historic lows in the stock market at this very moment in 2020. So think long term, because money needs time to get past the ups and downs, the volatility that comes naturally with the stock market in order to make its way up and generate that return that you need in order to achieve your goals. Okay, so the longer the time horizon you've got, the better actually, because money has a lot more time to kind of build up the momentum and for the income that you potentially reinvest through the stock market to compound and help you generate a healthy total return. The third way to overcome your fear of investing is to choose a credible strategy. Okay, now, an investment strategy is essentially the way you approach distributing your funds, i.e. actually investing your money through the market. So some people might choose to invest their money by trading through the market, so you're kind of buying and selling out of the market. Some people might choose to buy and hold for the long term. Some people might choose to invest for dividends via dividend income investing. Other people might choose to look for assets that are below market value and therefore invest in that and therefore capitalize on that extra value that they might have identified. Choosing a credible investment strategy is absolutely critical because it just helps you make sure that your money is in the right type of assets, and those assets are exposed to the right environment in order for your money to work best for you. So I personally prefer to invest my money choosing a passive investing strategy. The reason for that is because I prefer to focus on learning how investing works, putting my money to work myself, and focusing a lot of my efforts in making sure that I'm investing in assets that aren't costing me a lot of money over time, i.e. focusing on fees, but also making sure that my money is invested as globally and as diversified as possible, such that I then minimize the risk that I can get exposed to very specific companies. Now, of course, with diversification, you also have exposure to the general markets, which is why at this very moment when I'm making this video, globally, all markets are down because market risk is something that affects pretty much everybody at the same time. Tied to this idea of choosing a credible investment strategy is your asset allocation. Broadly speaking, you can invest your money in equities and bonds, okay? So almost choosing the correct weights between equities and bonds should give you the right exposure to the right type of assets to be able to generate the returns you need to achieve your goals. So a rule of thumb out there is to choose to invest based on 110 less your age. So if you are 35 right now, 110 less 35 would give you 75%, which that rule of thumb says you should invest 75% in equities and the remaining 25% in bonds. I mean, it's just a handy rule of thumb that just gives you an idea of how you might want to approach weighting between equities and bonds. But saying that though, the real weighting between equities and bonds really depends on your attitude to risk, okay? If you're somebody who's risk loving and who has a long enough time horizon, it will serve you well to have more of your allocation allocated to equities rather than to bonds, because you'll be exposing your money to sufficient risk enough to generate you a decent return as time passes. But if you're interested in this idea of passive investing, I've made videos before looking at index funds and ETFs, comparing both of them and explaining to you how they work so that you can take that next step in order to make an investment via passive investing. I'll put a link below and above to a recent video we made about passive trackers for you to check out and take that next step. So the fourth point I'll make is to start small. Okay, don't throw your life savings into investing through the stock market at one go, especially if you're somebody who has historically feared about investing through the stock market, or somebody who is at the very beginning stages, okay? At this very moment, my best recommendation would be to spend some time assessing your current personal life and need for cash flow in your life at the minute. Make sure you've assessed the short-term need for cash flows, and then look beyond that and assess how much more you've got left over in order for you to start to invest through the stock market for the long term, okay? So the key there is making sure you've gotten the cash flow element correct, and where possible, be as conservative as possible, because really and truly, with the current situation we're in at this moment with the economic downturn, we have no idea how long that might last. And so the more you have some exposure to cash, in the event that things that you don't predict suddenly start to happen and you need to respond with available cash flow. So assess that, and then what's left over is what you can then start to use to drip feed into the stock market in order to gradually gain some comfort. This also has the advantage of giving you some diversification, because you'll be buying into the stock market at different pricing levels. Now, by all means, if you're somebody who's risk loving and you really want to go all in and invest your money in order to take advantage of maybe a large price drop, for example, feel free to do that. But my recommendation is always kind of start small if you are a complete beginner or somebody who's been fearful about the stock market, and then gradually ease your way in. Now, the fifth thing I'd recommend is to automate your investing in order to remove the emotional biases that come with deciding when to invest or trying to time the market and so on, okay? When you automate your investing, you adjust investing no matter the weather, whether the stock market's low, whether things are high up, what have you. You have developed essentially a system for making sure that you are consistently investing through the stock market. I highly recommend this because it really then makes the job easier for somebody who's new to investing, because all you do is set up an automated standing order or some form of payment into your investing account. And what that does is you're essentially buying perhaps into the same funds that you might have identified, or into the same securities that you might have identified, but doing it on a consistent basis. And the key there is having that time in the market, rather than always looking out for and joining the many internet forums out there of people who are trying to predict when we are at the bottom of the market. Focus on making your investing as automated as possible, and therefore as consistent as possible. And what that does is it makes sure that you have your foot in the market at all times, and you are in it for the long-term ride. Now, just to summarize that, with all these 5 points on understanding the stock market, investing for the long term, choosing a credible investment strategy, starting to invest small in order to ease your way in, and automating your investment to remove emotional bias, when you combine all of that, you will find yourself being somebody who gains investing confidence to be able to actually take that step in, hopefully to make your first and what I hope will become your ongoing investing journey. Guys, I really hope you've enjoyed that video today on how you can approach getting rid of that fear of the stock market and getting started with investing. If you're somebody who's experienced fear with the stock market, I'd love to hear from you what your exact fear is. Do you fear losing your money? What is the main concern you've got when it comes to investing? Drop me a comment below and let me know. I'd also love to know if you thought that the points I made sense to you and resonated as things that might potentially help you fight that fear and to get started with investing. If you like that video, please make sure you hit that like button, because it really helps to encourage more people to engage with our videos. If you're new to our channel, don't forget to hit that subscribe button and that notifications bell so you get notified when we publish content twice a week on a Tuesday as well as a Thursday. Guys, thanks a lot for watching this video. Remember, investing can be fun, but you've got to actually understand what it's all about, and provided you're thinking about it for the long term, it can work for you in helping you achieve your goals. Take care, and I look forward to seeing you again on our next video. Bye for now.